We have a massive day on Monday morning before the market opens, as SoFi will be releasing their latest quarter earnings, and this is a company that is up 137% over the last year, currently trading right there at the upper end of the 52-week range, although the current valuation does look incredibly high. If we were to compare this against others in the sector, well, the median sits at 12.1, meaning right now this company trades at an incredibly high valuation, 1,169% more of a premium than others in the sector. Some of the good things we do like though, if you just look at the number of members they have added on a quarter by quarter basis, we're talking double digit every single one. Just in the most recent Q3, we can in fact see they added around 756,000, and we do expect by the end of quarter 4 to be sitting over the 10 million member mark. In terms of why this company does trade at a high valuation, well, let's look at their growth that does come in at an A. Year on year, revenue up 32%, the sector at 5%. Forward looking, 26% anticipated, the sector at 6%, and their EBITDA growth does also look very impressive, 87%, when the comparable sits at 9.5. It is also important to look at their profitability, which does get a D-. The gross margin itself does look very strong at 83% when you compare it to the sector at 59%, but the thing that currently does let this company down is that they are burning cash. Negative 1.2 billion is the cash generated or cash loss from their operations over the last year, and when we look at the sector, it does sit a lot higher at 141 million, which is a positive. However, having said that, when we look at their latest investor presentation on a trailing 12 month, not only is the revenue moving up, not only is the adjusted EBITDA going in the right direction, but for the first time, quarter 3 2024 on a trailing 12 month, they have now had a bottom line net profit, and as we can see, that has generated $214 million. So actually from this moment on, we do anticipate it will move in the right direction, and we should see the cash going from cash lost from operations to cash generated. Looking forward then to Monday, they are anticipating a 95% growth on the earnings per share year on year. Now that is very impressive, but just look at the next two as well. They're anticipating triple digit growth, 183% in quarter 1 25, 606% in quarter 2. We also like the fact that over the last 4 quarters, even if it has been marginal, they have outperformed the management targets. That is a 100% track record, and if that does give you faith, they will be able to hit their earnings per share for the full year. Then right now, yes, forward P does look very expensive, but it does come quite some way down to 62.4. Now, one thing we like about management is that they continue to outperform what they've guided for. If we just look at Q3, the guidance on the lower end to higher end, 625 to 645, they were actually higher for what they reported at 689, and this also extended to the adjusted EBITDA as well as the margin, and as we can see, the bottom line and earnings per share. So very strong in that they do continually outperform their guidance. We just showed it over the last year, and one thing that we are very impressed about is even the full year guidance for 2024, they continue to extend that. As we can see, the original guidance was revised once, and then it was revised again for a second time, and the majority of analysts do believe that they will not only outperform in terms of this latest quarter, but they will increase their guidance once again, which is something we have come to love with SoFi, but also a bit of a worry, because if people are continually believe that they're going to continue to increase their guidance and perhaps they just maintain it, that could affect the share price, but again, that is anyone's guess. We also like the fact that numbers continue to tick upwards, the net revenue up double digit, 30% just in the latest quarter, and the margins, which are very important because we do always say high quality companies, they don't just increase their top line, but they also improve their efficiencies, is something again we have seen from SoFi, but again something we will want to continue to see in the next quarter and moving forwards. We also like the fact that when we come to institutions, there's around 38% ownership, and whilst they have sold around 140 million of shares over the last year, they have been buying a significant amount during the same time period, so institutions clearly do like this company. We've also noticed on the 16th of December some insider buying for around 31,000 shares, which actually came to a cost of $500,000, and we do typically believe that insider buying is a very bullish signal as management buy as they believe the share price over the longer term will increase. On top of that, we can also flag that something maybe we haven't seen in quite some time, but analysts are actually increasing their targets. We have here William Blair Analyst initiating a coverage. Now this covers both SoFi as well as Affirm Holdings, but they now believe that this company in particular that we have put under the spotlight today will outperform. In terms of the reasons why they have gone for this company, they say that in their opinion, it is that traditional banks, cards, as well as consumer finance solutions struggle to keep pace with younger consumers' desires, and that is something that SoFi will be able to exploit and ultimately help in terms of their numbers. They also believe that the fintech sector as a whole is a crowded state, but they do believe that one of the leaders out of this will be SoFi thanks to their digital user experiences, their accessible consumer finance products, and their flexible payment options. In fact, they go as far to say that SoFi, they believe, a leading digital bank on track to become a top 10 financial institutions on deposits alone. And they end by saying that we accordingly anticipate that multiple expansion will accompany steady organic revenue growth, stable credit performance, expanding capital cushions, and ultimately improving on the profitability. So that is a very good sign to note. And when we do take a look at SoFi's performance just over the last year against companies in the same sector and of a comparable size, they have been the best performing, up 137%. Now, one key thing to remember about this is that this is the past, and the performance of what we have seen does not correlate to how they'll perform in the future, but good to see that if they can continue this, then maybe we could be in for a much stronger ride over the longer term. Finally, we just want to leave before we look at our own valuation that the growth of the company has looked very impressive, double-digit year on year. Maybe one factor you need to consider, something we'll look at from their earnings, is whether or not we will actually get to a point where this top-line revenue does start to slow down. And another thing to consider is that they have been diluting your position as a shareholder over the last few years. What we would say is, though, this isn't a massive worry if they can continue to outperform the S&P. Now, before we jump into our valuation, we want to let you know we have released our latest free weekly article. We drop one every single Monday morning where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up, read straight away, where you'll be able to gain access to 46 undervalued stocks for the month of January. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that, you can grab a copy of 43 stocks that Wall Street themselves believe have the most upside right now in the S&P 500. So click below, you can sign up and read straight away. We then move into the intrinsic value where we get to $18.40. As you can see, this is derived from the DCF model. So we have the free cash flow year on year. Our growth rate of 12% is fairly conservative, lower than analyst targets. And with the discount rate here, we do get the sum of the future free cash flows. And ultimately, the intrinsic value comes to $18.40, which is above the current market price, which right now means upside of only 2%, actually not far off what we would say right now is the fair value. Now, these numbers are subjective, and you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for SoFi or any others, but we can show you for full transparency at 10%, intrinsic value $16, downside of 10%, at the 8% point, downside of 21%. But for example, if you're someone that believes these numbers are way too low, if you were to, for example, put in 20% moving forwards, then the intrinsic value would sit somewhere around 31. Now today we do want to take through the 12% rate, and it doesn't finish there because ultimately we do apply a margin of safety. We like to start off with 10% and we execute on that if it meets our 3 golden criteria, which is typically a wide moat, strong financial metrics, and good forward-looking data, meaning if you want a 10% MOS, it's a buy at 16.55, at 20% around 14.71, and at 25 around 13.80. Now, the one thing we would say, if you are someone who is an investor for the longer term, then maybe these short-term fluctuations actually don't really affect your buying thesis, and you are someone that looks to the longer term, 5 years, maybe 10, and this is why we do have this exercise here. For example, if SoFi can reach the heights of PayPal, whether you believe that in the next 2-3 years, then ultimately, based on the market cap right now, the SoFi's price will reach $84, which does translate into 368%. Now remember, these numbers are based on historical data, so if they do come out with a very strong earnings, we will update our valuation, so it could be a lot higher than what we currently see. But again, it depends whether you have the short-term mindset or the long-term mindset, where ultimately this could be an $84 stock company. In terms of Wall Street, again, right now they see this company at $14, which means downside of 22% by the end of the year. But if we do see very strong earnings, which is something I do believe we will get, just looking at how they've performed, they've managed to continually increase their guidance. They've performed better than in fact what they've guided for that quarter, and the number of members as well as other metrics continue to increase for SoFi at a double-digit rate. As always though, do give us your thoughts in the comments below whether this is one that you do hold before earnings, maybe you're keeping your eye on it, or for whatever reason this isn't one you see fitting into your portfolio, or maybe you believe it to be overvalued. Give us your thoughts below, and don't forget to sign up to the free weekly newsletter. Grab those spreadsheets, come and join us in the Patreon where we do talk about our weekly buys and sells, and as always, have a great day. We'll see you all on the next one.